evening, it's Quant Trade Edge, and today I was going to go over how we prepare for and trade news events like the CPI this morning. So this is a chart of the S&P 500, and it's on the 1 minute time frame. Before a big news event, the first piece of information that I'd like to have is what the options market thinks is going to be the reaction from the news. So a few minutes before the news comes out, I will check the at-the-money straddle price. And the at-the-money straddle price is just the price of the call and the put for the strike that is closest to where the price is trading. So in this case, that strike would have been 52.70. And I look at the 1 day expiration, because that 1 day really tells you what the expectation is for today, not today combined with tomorrow, combined with Friday, if you were using a weekly. So, here, before the news was released, 52.7125 was the price that was traded, and the straddle value, the call plus the put, was $48. So subtracting that $48 from here, you get $52.2325. And you would also add that here, because ahead of the news, we don't know which way it's going to go. So if we assume from here that it actually goes higher, 71.25 plus 48 is 53.1925. 53, that doesn't look symmetrical. Let's see, 71.25 plus 48. Nope, it is. 71.25 plus 48 is 53.1925. So 53.1925. So when we get this huge candle on the 1 minute chart and we take out that low, which I call lower boundary, it just means, that price anchor from before the news plus the at-the-money straddle, minus the at-the-money straddle is lower boundary, plus the at-the-money straddle is upper boundary. The fact that it pierced through is a good sign that it wants follow through. On a day when it's just going to noise around here, you would not even get close to that lower boundary. The straddle would have vastly overestimated the probabilities of various scenarios. And but in this situation, the fact that we pierced it on such a big candle all within 1 minute tells us that anyone who sold that straddle is already underwater, and their calls would be relatively worthless that they sold. The puts that they sold have gained so much delta that they have to continue to sell futures to stay delta neutral. And that's what causes the positive feedback loop of continuing in that direction when you gap or thrust through this level. So there was one easy trade in the morning off of this news, and that was selling the first reaction. The first reaction was this little 2 minute bounce here, and this bar that has a higher low and a higher high, because you'll notice all of no bar here has a higher high. That doesn't have a higher high. This doesn't have a higher high. This doesn't. This does. And if you were to sell that, you could trail your stop behind the previous bar high. So when you get to this bar, your stop's above this. When you get to this bar, your stop's above this. And you'll notice we keep making lower high, lower high, lower high, lower high, and then we get this bit of a climax. And if you recognize that as a climax, you could have exited on that bar. But if you didn't, this same methodology of just trailing your stop one tick above the previous bar would have got you out at 51.8850. So this here would have got you in at 52.0875. So that's 875 plus 1150, call it 20 points in fairly quick order here. And your risk was only 6.5, so call it 7 points. So you made 20 points off of a risk of 7 points on that move. The other interesting thing to note about this whole thing is when we came back up to that lower boundary, it served as resistance and pushed price back down. Now this works in, obviously, many markets. I use it primarily, in fact, the origination of this strategy was to use weekly options on stocks during earnings season, because earnings are such a fundamental event that you can get very large gaps. And another market that this worked well on is crude. Is gold, right? Gold is also a very reactive market to news like the CPI. And here, the news, the price level before the news was 23.6830. So if we say, let's see if I can get this here. If this is our price level, 68.30, the straddle from right before the news was $25.10. So that would put us at 43.20. 43.20. So as you can tell, the first push down did not get to lower boundary. Then there was a very sizable reaction up that that looks like more than 80% retracement of the move itself. Then we made another move down. And I'll just put an RSI on here to see if we can spot any divergences. But yeah, there we go. Compared to that first push, this push down here was a divergence. This push down here was another divergence. So this is also lower boundary. It's the price from before the news minus the at the money straddle. But you can tell the difference here is, on the ES, we saw one bar take this out. Here, we get a bounce. It's been 43 minutes before we come down here. And the options configurations are continually changing. People are buying calls, buying puts, selling calls, selling puts, constantly through all this time. On the ES, when all of this happened in 1 minute, people don't necessarily have the time to rebalance. And that's what makes the level significant. So here, by the time you come around all the way over here and do this break isn't particularly significant. It's happening with divergences. It's happening on a less dramatic bar than the one that took out in ES. And then you can see it didn't really stay below. It came up, came through, came up, came through, came up, came through. And then you had a really good looking trap right here. This could be considered a 2B. It's just a trap. And when you have these divergences, that trap is a solid play. And that trap led to getting all the way back to the top of the range. So both of these markets basically zoned out. Here you can see, I guess now it's 9 p.m. and gold is just zoning out and staying in that range. ES did the same thing. So, these are the types of things that we point out in our Discord channel. Let's see if this works here. So, gold straddles 25.10, 48.0 on the ES straddle. That was at 7:18, so that was before the news. We're nearing the lower boundary, got there pretty fast, went through it, below LB equals trend down, And then 51.91 is just the low from a few days ago, where we had like two lows in the same area. So that was the area I was targeting. SI and GC had started reversing initially. That they didn't make it down to lower boundary. They kind of popped up. And then really this whole thing, the 1.272 extension of this pullback here is 23.4150. And gold did end up getting there. So where was that? I'm not sure if I posted another picture again, but if you remember, oh, there we go. After this move here, gold got down to that 23.4150 level. And then when this trap populated there, I just said, GC looks like a trap bottom on the 1 minute. So this is the kind of live commentary. I mean, today is a very hectic day, so I just stuck it all under real-time analysis. Normally we try to separate it out by product, setups on ES versus setups on GC, because we know different members trade different commodities. But as fast as things were moving today, I just wanted to get all the information in there quickly. So, this is what we do in our Discord. This is one of the methods we have using those boundaries. Our primary methods are more the Forex and just using market structure itself. If you're interested, I'll put a link to our Discord in the information box. And the links are only good for 7 days, so you need to act on those quickly. We do have, let me see if I can pull it up here. We have a section here for general chat, and in here, we've got well over 1,000 members, and this is free, entirely free. And as we go down here, we get into the member channels. This is kind of where we focus on different commodities and point out what was made. But and then we do kind of daily homework here to just sort of, for example, the homework yesterday, pointed out the CPI is going to be there. I'll post the straddles before the CPI, and it gives you kind of an idea of things that we're watching. Then we got some premium member chats, and then of course we also will do some recorded videos and some modeling, some special strategies only for members, and we do Q&As periodically. Oops, I better turn that off. We do Q&As to answer questions that our members have. So anyway, I hope you had a good day trading the CPI. Tomorrow is the PPI, so we're going to follow a similar method.